Good morning. Steve Sosnick here with today's Interactive Brokers Morning Market Morsel. What we're seeing today is quadruple witching day. That was a term that used to strike a lot of interest, fear, worry into a lot of people's mindsets. But I think over time, the markets evolve, the markets have learned, market participants are smart. And I think today what we're seeing is a much more quiet market, and in many cases, from a point movement kind of day, a much quieter market than we've seen over the last few. At least as of the time of this taping, the markets are up very marginally. We saw some buying this morning on the open, and that seemed to be absorbed fairly quickly. And we'll see where the market goes. A lot of these days tend to meander because the action's really on the open when the index futures and options expire, and on the close when the equity options expire, and when there's some rebalancing to be done. Today there's some S&P rejiggering as they're creating some new sectors within the index, subsectors within the index. And so we may see some activity around that. Probably not unless they're changing the big index weightings, but that remains to be seen. And so it's kind of informative to watch the days as they go by with the expirations, because we see activity that over the course of the week that sort of gets resolved as the day goes on. I think a lot of the movement up that we saw this week was expiration related. It's a factor of gamma trading, as there's big open interest in calls and puts, but let's say there's big open interest on given lines. Those who write options tend to be professionals. Those who buy them tend to be speculators. It's not 100% the case, but let's use that construct for now. As you go through a strike, particularly as you go up through a strike, those who are short calls basically kind of need to go out and hedge by buying stock or futures, whatever it is they're short. Those who are long, if they're speculators, are more content to just let it ride. So as you go up through strikes, if you've got professionals on the sell side, they tend to go out and need to buy stock to hedge their positions, and that adds a little fuel to the rally. Today, we'll see where that takes us. Again, the big index futures and options have expired already, and that still leaves SPY and plenty of other big ETFs to go at the close. But we'll see where that takes us. I think as of now, we're seeing some quiet, which maybe a bit of consolidation as well. And otherwise, hope you have a good weekend. Thanks.